Bitcoin, it's not about buying a coin. It's about escaping something that nobody's even warned you about. By the end of this video, you should hope to understand why so many early Bitcoin believers are now millionaires today, right? So I'm going to break down the 4 principles that actually distinguish Bitcoin, the core fundamentals. This isn't going to be hype. This isn't going to be a price prediction. This is going to be why Bitcoin itself is different from any other asset in the current financial system. So the first principle I want to talk about is what actually drives price. When you look at what actually drives price, the price of anything is the supply of the asset divided by the value of the current currency it's denominated by. So when you look at Bitcoin today, Bitcoin has a $21 million fixed supply and an infinite US dollar as the denominator. When you view price action of Bitcoin today, it's not really about anything else. It's about the politics of the United States dollar. It's a denominator effect. When they print more money, or when Jerome Powell says we're cutting by 25 interest rate basis points, they're weakening the dollar. It makes hard assets appreciate in value because that's just how the price formula works. And now, when I look at Bitcoin, what I first saw when I read the white paper was a peer-to-peer electronic cash system, something that's decentralized, meaning that the government or a shadowy figure can't just mess with it at any time that they want. You know, a blockchain explained simply to your mom is time-stamped, transparent, and non-transmutable. You can't mess with it once it's on there. That's the point, right? Miners receive an energy cost, that preferably this is renewable energy. But how Bitcoin price actually works is miners will incur an energy cost. Then they'll use that energy cost into an algorithm. That algorithm will compute a digital scarcity token and release a Bitcoin in a block. Right? And that's essentially how it works. It's very layman terms. But my point in explaining that is that value proposition favors physics. Does the current market reflect Bitcoin as a value proposition in energy and physics, or does it reflect the politics of the United States dollar? When I'm looking at the signs, I would much rather be investing in something that has true physical scarcity. So Bitcoin was not the first digital asset. It was, however, the first permissionless blockchain to successfully settle a peer-to-peer transfer. Now, if this seems very confusing to you guys or to you, I just want you to understand that you never had to understand how a car engine worked to drive the vehicle, right? So the next thing I want to talk about is to bring this back to traditional finance. One thing that separates Bitcoin is its non-relation to the traditional market. And it's non-related because it's this entirely new thing. But the traditional market is revolved around liquidity and volume. See, liquidity is amount or cash, or is it there or is it not there? And then volume is, how much. So the most liquid and the highest volume market in the world is the United States Treasury market. When they print more dollars, the Treasury is making new notes, new bills, or new Treasury bonds, right? That's how they finance that's how we finance ourselves as a country if you live in the United States. So to branch apart from that, I wanted to show the pull-to-par effect. So this is a traditional bond. And in a traditional bond, you have 3 zones. You have par value, you have discount, and you have premium. The par value is synonymous with fair value. So if you're purchasing the bond, you're likely going to be at a discount or a premium. Let's say you purchase the bond at a discount value. You'll notice on the graph, there's a vertical line that says time to maturity. So if you were to be a bond purchaser at a discount, over maturity, or the time that you hold this bond for, over time, it will appreciate to par value. So let's say you bought it at 900, at the end of maturity, it will be at 1,000. If you bought a premium bond, it's likely you bought over par value, so you're gonna be buying at 1,100, and it's likely that at maturity, this will come back to par value at 1,000. This is the pull to par effect. And this is the thing that I want to establish as a visualization. I'm going to apply this to cryptocurrency, but it should not be mistaken for exact quantitative efforts. This is more qualitative than anything else. So we talked about what actually drives the price of anything, and then we talked about traditional finance's bond market having a pull-to-par effect. I would like to combine those now. And the third principle that I want to talk about that separates Bitcoin from the traditional financial system, that is going to be lacing it all together. So here it is. Right? Don't be overwhelmed, because you don't need to understand how the car engine works to drive the car. So Bitcoin came out in 2009. Its very first block of renewable energy that was printed into digital scarcity in a token format was called the Genesis block in 2009. That was Bitcoin's first iteration and the first time that people were able to settle peer-to-peer decentralized transfers online. This is a very interesting value proposition, but looking at this price today, I view it more synonymous with a discount period, a premium period, and a par value period. So if you don't believe me on this, I'm gonna link in the description my TradingView chart that actually has this visualization, oh my God, above it, right? But to just take a look at the halving period specifically, because we have to remember, every 4 years, Bitcoin becomes twice as hard to compute or to mine. And when miners take on that energy cost, they're inscribing in stone that period of time for that computation today, right? That is what it means when you take energy crystallized into digital scarcity, right? That is the true Bitcoin value proposition. The true value of Bitcoin favors physics, scarcity. It doesn't favor the politics of the United States dollar. So when we put this on a visualization, what we can see is that Bitcoin has an initial leg up immediately. It will trend back down, have some volatility. It will usually trade way under par value. And this is when usually all the banks and the hedge funds, and they all go crazy and they all make these crazy statements about Bitcoin. And then as time goes on, people will readjust. They'll remember what they bought it for. And you actually see new all-time highs. This is no different this year. And there's a lot of arguments around the 4-year cycle. So I'm not trying to make a proposition for a 4-year cycle. I'm trying to allow you to understand the true reality that drives the price of Bitcoin. And then again, the true reality that drives the price of anything else. It's the amount of the supply divided by that current value of the currency. So to move on from all of this stuff, right? Because this is kind of a lot, but how do you actually apply this? The fourth thing I want to talk about is why Bitcoin's unique in the sense that you can always win right now. We're so early to the narrative, and this is, again, non-financial advice, but we're so early to the narrative that it's my belief that $1 a day, $1 a week, maybe $10 a week, anything at the exact same time, let's say every Monday, I'm going to put $1 into Bitcoin. Every Tuesday, I'm going to put $25 in, or every third of the month, I'm putting $50 in. Those are realistic examples of how people have changed their lives entirely with Bitcoin. And you might think you're priced out right now at current prices, but I just encourage you to remember the pull-to-par effect and the psychological impact that viewing prices has on the human mind. We don't really conceptualize physics as greater than politics when we discuss Bitcoin, especially in trading environments. People are trying to seek alpha. That's not what this is. When you hold Bitcoin for a long time, or you dollar cost average into it, you're betting that the United States dollar will continue to dilute itself. But I know that was a lot. To wrap everything up, when you really walk away with this, Bitcoin, it can't be diluted, can't be inflated, can't be counterfeited. Dilution, inflation, and counterfeit, that is the main 3 problems with the United States dollar itself, and not only the US dollar, but any currency that humanity has ever tried to transact with. One of the first currencies ever were seashells, and they were only valuable because they were extremely hard to create. So when I look at the market today and I see the United States dollar and I see us weakening the dollar, weakening tariffs, all this stuff, noise, nonsense. Is there more dollars in circulation? Yes. Should the value of hard assets go up as a consequence? Yes. And I want to also suggest that energy has been declining. And we can see this. We got rolling blackouts, you got AI demand, infrastructure, blockchain, EVs, all of that stuff. The narrative of Bitcoin is that. It's not anything else, but Anyways, I'll get too distracted if I keep going here. I hope this was valuable to you guys. If you want to hear me talk about anything else, drop it in the comments. Please subscribe if you enjoyed this video. If you learned anything valuable, let me know. And my name is Dylan. I will see you guys in the next one.